Yes guys, welcome back to another video, and today we are going to be going through our end of week analysis to go through this 100% win rate for this week, which was 4 out of 4 trades so far, even on NFP week, which is absolutely insane. So let's go over the analysis. Let's get it. Firstly, we're going to jump onto the 1 hour time frame and we're going to mark out all our liquidity levels. So right now what we can see is we've taken out this level of buy side here, and our first macro session starts at 2:45. So let's jump into the 1 minute time frame and let's see where price would want to draw to. So what we can see here now is prior to the macro, we have around 6 minutes. Price has taken out this buy side liquidity, leaving this short term high to be taken. So hopefully now we can build some structure and see if we can get in short of this trade. So you guys can see how important it is to have your displacement, because here is our level. We've had no candles close below our displacement to confirm that we have shifted structure. So price is just going to continue it to the upside. To say if you had your displacement higher, or you're just taking the wicks as displacement, you would have got faked out on, say, if you had taken this bearish gap here and you would have just got completely destroyed. So we've taken out the short-term high yet again, and we want to see price displace lower than this level. So that is the end of the first macro now. We've now hit 3:15. So now we're going to wait until the second macro, which is 3:45 to 4:15 UK time, which is then 10:45 to 11:15 New York local time. Coming towards the next macro, we have now seen this short-term high has now been taken, and we want to see price displace lower than this short-term low right here. So we have, so you guys don't get confused, this is buy side liquidity we've taken out. So we've taken out the short-term high, we've got the buy side liquidity has been swept now. And we also now have this level of buy stops to mark out. There we go. So there we go. We have a nice sharp displacement to the downside, which is where we will now look to take this 1 minute bearish gap. So there we go, we've now just got our tap into this 1 minute bearish, and we will look to target this sell side liquidity for 73 points, with our first TP being at 25 points, with our stop loss just at these highs. So we are risking 16 points to make 73. So we have a nice 1 to 4 risk reward on this trade. So let's see how this goes. So there you have it, we have first TP smashed. So we now would have stops at break even and let the rest of the trade run. We are currently now risk free. You would take off half of your position and let the rest of the trade run. So there we go, we've now just been taken out at break even, and you'd be done for the day. As soon as you get a win, you're done for the day. If you take a loss for the first time, then you can take a second trade at half position size. But right here you can see we hit first TP, stops to break even, got stopped out, you're done for the day. So lovely stuff to that. So we got nothing in the first macro, we took out that first liquidity level, but got nothing, price fell to displace. We then took out this next liquidity level prior to the second macro, and then we took out the short-term high, sharply displaced lower, leaving behind that 1 minute bearish inside of the macro, tapped into that 1 minute bearish, got 25 points from that trade, stopped to break even. So we're on to Tuesday now, and we're going into that second macro. So you know the drill, we're going to mark out our key levels. What we get. So already here we can see we've had price come down and take out this level of sell side liquidity. Now that we've taken out this level of sell side liquidity, our bias is now going to be looking for longs. Is we have this level of minus sell side. We want to see coming into the macro, we want to see price take out the short term low and then price form a displacement, and then price to take out that displacement, and then look for longs to target these London highs. So there we go, price is taking out the short-term low. Now we want to see price come back into the range and take out and sharply displace to the upside. So there we go, price is now sharply displaced, and if we do get a tap on this 1 minute bullish coming into this macro, then we can take this entry. So we can't take this entry because it is not in the macro time. So we now need price to displace higher than this level to see if we can get an entry. So there we go, we've now sharply displaced, and if we get a tap on this 1 minute bullish, we can get in long for this continuation. So there we go, we've just got a tap on that 1 minute bullish, so we would enter long targeting London highs, keeping our stops tight for an 11-point loss. First TP at this level of minor buy side. But let's see what we can get. So with that first candle, you can see, I'll actually just go back, that one candle went straight to first TP. So you would take off half of your position here and then leave stops to break even. So the trade is now completely risk free. So let's see if we do get final TP or we get stopped at break even. So there we go, just like that, we got taken out of break even, and that is a trade for the day done. Now, there was actually a second trade in the next macro that I saw, which was actually very clean, got in off the inverse fair value gap. This was actually the move. The move which happened in the second macro, where it continuated to London highs, was the trade we were aiming for here, but it didn't happen here, it happened in the second macro. But overall, like I said in the previous trade we went over, if you get a win, you are done for the day. Simple as that. Let's get on to the next day. Into the next day is Thursday. We're marking out our liquidity levels as usual. So let's get into it. So here you can see the structure of our liquidity levels being set up. So preferably we want to see price come and take out this buy side level to then look for potentially a short position. So right there we can see price has come and swept out this buy side liquidity 15 minutes prior to the first macro. So let's see what we can get from this position. So price doesn't always have to take out the short-term high, but it is high probability when it does. Now we did get a nice sharp displacement to the downside and potentially could have got in on this 1 minute bearish, but we did not get a tap in. And then price drew and took out this level of minor sell side. So I was then uninterested in this position. So price did come back in, but not interested. So we're going to wait until the next macro to see if we can get a position. Now I do believe ES did have a factor to play in for this trade, as price action on this Thursday of the 5th of December was not very good whatsoever prior to market open. So let's see what we get for the next macro. Price has taken out this short-term high already. We would want to see price displace lower here. So right there we've got a really nice strong displacement. We have this order block that we can get in of. So if we do get a tap in on here, then we can enter in for shorts. So right there, we did get a tap on this order block. So we would be running a 18-point stop, targeting sell side liquidity, with the first TP being for 25 points. So let's see if this trade did work out. So there we go, we already smashed first TP right there. So you would take off half of your position size here, leave stops at break even. So now the trade is completely risk free. So let's see if we get final TP or get taken out at break even. So there we go, we got taken out break even for a 22-point gain, and that was that. We were done for Thursday. The price action was very bad, it was very choppy. If I go into ES as well. It was absolutely disgusting. You do not want to be getting involved with this until it is actually taking out some liquidity and it actually forms some real structure. So, right guys, so you know the drill is Friday. We're now going to be marking out our liquidity levels, so let's get straight into it. So coming into the second AM macro, we can see price has built up this structure in between the two macros, so we can already see that price has taken out this short-term high. Want to see it displace lower than this short-term low. So let's see if we get this displacement. So right here we can see price has displaced. Now if we do get a retrace into this 1 minute inverse fair value gap, then we will get in for shorts. So we can see there prices came back and tapped back into that inverse fair value gap. So we'll be running a 12-point stop loss, targeting sell side liquidity for around 100 points, and we would have our first take profit at 25 points. Now for this trade, usually you would run it all the way to final TP for 100 points, but for this trade, for the sake of trying to get to my minimum balance on my funded accounts, I took profits at the 1 to 2 as I was on the aggressive, and the last 3 trades have all been first TP hits. So for the sake of, trying to get, and there is also you have to keep a 30% consistency rule, which is quite annoying. So that is what I'm also trying to stay in the lines of. But it's not like I'm hitting 1-to-1s. This was a very nice 1 to 2. So I still 2x'd what I was risking anyway. So let's see if this trade did work out. So just like that, we smashed TP. Price came back up and tapped into this 1 minute bearish gap and moved further down. Now let's see if you had taken off half your position size, if price would have run to final TP. So there you go, taken out at break even, and that is done for the day. So that would have been 4 out of 4 dubs from that week. So I hope you guys have enjoyed this video, and I'll see you in the next trading week. Let's get it.